Most traders, they're absolutely obsessed with one question. When should I buy? But what if that's completely the wrong question? Today, we're going to dig into a really powerful idea that says the real secret to making money trading isn't about when you get in. It's about mastering when you get out. I mean, think about it for a second. Almost all the advice you see out there is about finding that perfect entry point, right? That one signal, that perfect chart setup. But what if that obsession, that constant hunt for the perfect time to get in, is the very thing that's holding you back? Our source material says it just might be the single biggest mistake you can make. And this quote just nails it, doesn't it? It's a simple, but wow, what a profound truth. There are countless strategies, books, and courses on buying, but the art of selling, that's usually just a footnote. And that's the critical gap we're going to explore today. And trust me, that gap is everything. Because here's the bottom line. You don't actually make money when you buy something. You only lock in a profit or a loss when you sell. Your entry just kicks things off. It sets up the possibility. It's your exit that decides whether you win or lose. This right here is the core message. An exit plan isn't just a nice to have. It's absolutely non-negotiable. It's the one tool that protects your money. And maybe more importantly, it takes all the emotion out of what is always the most stressful decision in any trade. And the best part? It doesn't have to be some crazy, complicated formula. The source we're looking at gives us two beautifully simple, almost mechanical rules that anyone can start using right away. We're going to break down what they call the time-based rule and the price action rule. Okay, so this first rule, it's all about using the clock as your new best friend, your discipline partner. It's designed to save you from that horrible feeling, the slow, painful bleed of a trade that just goes absolutely nowhere. The rule itself is crystal clear. You get into a position and you set a 30-minute timer. If that trade isn't in the green when that timer buzzes, you're out. That's it. No questions asked, no hoping, no second guessing. The decision is already made for you. So what's the logic behind this? Well, think about it. A good trade, a winning trade, it should prove itself pretty quickly. It should have some momentum, right? If it's just sitting there, flat, doing nothing for half an hour, that's a huge warning sign. The argument is that this lack of momentum is often what happens right before a big, sharp move against you. This rule is your shield. All right, let's move on to our second rule. This one builds on the first, but it's not about time, it's all about price action. And more than that, it's about fighting one of the most powerful and dangerous human emotions out there, greed. Okay, picture this scenario. You're in a trade, it immediately goes into a loss, and you're feeling that pit in your stomach. But then, it starts to rally. It climbs all the way back up to your break-even point. The source says this is a moment of maximum danger, and your only move should be to exit. Get out at zero and don't look back. And this just brilliantly shows the psychological game being played. Your mind, your emotions are screaming, phew, okay, I survived. Now that it's finally moving my way, I'll just wait for a little profit. But the cold, hard market reality is often that this is just a sucker's rally. It's a brief moment of false hope before the price reverses and plunges you into an even deeper loss. The market is basically giving you a gift. It's a free pass to get out of a bad trade without a loss, but it disguises it as a temptation to get greedy. This rule forces you to just take the gift, get out at break even, and live to trade another day. When you really look at both of these rules, you start to realize something. They point to the most important lesson in this whole framework. They aren't really about charts or timers at all. They're about something much, much deeper. The real battle in trading isn't an external one, it's internal. You're not fighting against other traders or some invisible market. You are fighting against your own mind, your own primal instincts, that powerful hope that a losing trade will turn around, and that even more powerful greed that whispers just a little bit more. These two rules, they're your weapons in that fight. So here's what it all boils down to. True mastery in this game comes from controlling what happens right between your ears. These exit rules, they're not just trading rules. They are a system for mental discipline. So the real question isn't what's a good entry. The real question is, do I have the discipline to follow my exit plan no matter what my emotions are screaming at me to do?